guys, welcome to Ascentis TV. Thanks for joining us. We didn't have a show in August because every man and his dog was on holiday, including most of our team as well. But great to be back, and we've got a shorter version of the show this time. We've got Tech Talk with Lee, who is continuing his series on getting paid by your suppliers, and this time he's looking at Xero's new capability in respect of cash flow management. Mark O'Brien's got his tax tip and quick tip, and as usual Lee has got AdminMin to make sure you guys stay on top of all of your compliance obligations with MNRC and Companies House. So let's jump straight in and listen to Lee's description of all of those updates on Xero.
Hey everyone, since the last episode of Tech Talk we've actually had a Xero product update. So I thought this would be an ideal opportunity for us to look at what Xero is doing within its own space. But before I do that, I did finish the last episode talking about payment services. So I really wanted to start this episode just showing you how to connect through to those payment services and how you can make the whole process of collecting money from customers as easy as possible for all parties. So here we are in the demo data, and you can access payment services just through the settings function here. When you get into that, you can get hold of them direct here, or you can go through the invoice settings. Now, I'm going to use this. I think people will be a little bit more familiar with the invoice templates and defaults. So if you click on the invoice settings here, you'll access this page where you put your branding theme and all your usual invoice settings. And you can see here, you can complete that process by just clicking on payment services here. When you get hold of payment services, you'll see Xero have already linked up to Stripe for credit and debit cards, for Go Cardless for direct debits, and for PayPal for PayPal accounts. And to connect into those, it's a relatively straightforward process. Just click the Get Started here, and providing you've already got an account with these providers, you'll just follow the normal process that you would really for a bank feed. It will take you into their user interface, link into the account and connect you through that way. It doesn't mean that you are limited to these three providers, and we've got a couple of interviews lined up with alternate providers, so I'll leave that for future episodes. But needless to say, you can access them here through the other available payment services. Now, if you have connected up payment services correctly, you'll see on the invoice theme a little online payments graphic here, and you can see here this one has been linked through to PayPal here with the little PayPal logo. Okay, so back to the dashboard, and a couple of features that came out really during the pandemic were the short-term cash flow and the business snapshot. Clicking on the short-term cash flow, you'll get this user interface. Now, obviously, there are apps in this marketplace, Fluidly, Float, Predict, and they're all going to do an enhanced version of this. But for an entry level, Xero have actually captured quite a lot of decent information. So to start off with, which actually collecting the data from the expected date on your awaiting payment for invoices, and also your planned date from your awaited payment on the bills. Now, that information would ordinarily be needed for the other software as well, although they would have a little bit more automation in terms of artificial intelligence and predicting when those planned dates are going to be. But providing you enter the details in there correctly, you're going to get a fantastic visual of where the bank balance is sitting for the next either 30 days, or you can do it by 7 days as well. So moving on to the business snapshot, and again we do have apps in the marketplace that are going to capture this information in a lot more detail. Futurely, Fathom, Spotlight, just to name a few. But Xero is looking to just provide those very quick flash insights to enable you to analyze the business very quickly. One of the features they've updated on this is the ability to move between accrual or cash accounting, which may be useful for some businesses. But in general, we've got all the KPIs that you would expect to see when analysing a business: profit and loss account, income, expenditure, gross profit margin, and also the top 5 or the largest operating expenses that are currently being incurred. From a balance sheet point of view, it doesn't really go into the detail of gearing, liquidity ratios, but it does provide an analysis of the equity within the business, and also the average time to get paid, which is really resonant with all the previous episodes where we've talked about driving that payment terms down. Now, moving on to a couple of the smaller changes that Xero have made, but it's usually the little things that frustrate the most. And that's probably the case with the bank reconciliation. As well as a nice facelift, we do have the option now to be able to auto add a bank transfer. So providing you've had the same details between a bank transfer in the past, you're going to be able to automatically press OK rather than re-enter the transfer details every time. One of the other smaller details is the ability to reorder columns within any report on Xero. Now, I found this probably most beneficial with the age payables and the age receivables. Perhaps for those of you that are a little bit more familiar with Sage reporting, you have the option now to move the total column before the aging periods, and that will probably look a little bit more familiar in terms of a report. That's how certainly Sage used to present it. One of the other features I can't really add visually on the screen is the ability to add attachments to the mobile app quote system. Now, I find that a really useful tool when you're on site for those that use Xero quotes, and I do promote the usage of Xero quotes. I think it's a fantastic tool, but perhaps there's a little bit more detail that you need to add to the quote. You can now capture that as an image, attach it as a file, and send it there and then whilst you're on site as part of the quote. So one of the bigger feature updates from Xero was actually a whole new change to the Xero marketplace. First and foremost, it's actually had a bit of a rename. It's now the App Store, and you can access that a lot easier now through the main dashboard. So clicking on the App Store here is going to take you to the main user interface. Now, the Xero App Store or the marketplace is quite a daunting area. There are over 1,000 apps within this now, and so it's actually generated a whole new product by businesses in terms of app advisory and app stack building, and I'm going to speak to someone who specializes in that in a future episode. But there are some basic features that can help industries if they just hop into the App Store and have a look at it. You can search for apps by its functionality on the left-hand side, or by industry-specific apps. If none of the headings there are helpful, you can also use the search function, and that's been enhanced as well. So, for example, if you wanted to search for time tracking, you could just search on that, click on that. With all the available apps appearing here, you can then filter them by industry and function. So you were looking for a time tracking app in the accountancy profession, you can filter it by there, and then perhaps we only wanted something that dealt with accountant tools. So you can shortlist that down now to 11 or so functions, and within that you can click on any of the apps, and hopefully you should be able to jump into a free trial just using your Xero login, so making that a lot more seamless to trial and get used to certain apps to see whether they're going to be a useful feature for your business.
Thanks, Lee. Great stuff. It's Tax Tips with Mark Overend. We are coming to the end now of the coronavirus support. In fact, today marks the significant change for VAT and pay-as-you-earn implications, and Matt's going to take you through those now.
Right, welcome to this month's tax tips. Obviously, we've had a break for August, and there's been quite a lot of change in the world of tax during the summer. For now, we're going to focus on something that is going to happen in the next few months, and that is a change to the capital allowances regime. At the moment, if you buy plant and machinery, equipment, vehicles, all of those things are added to your balance sheet, and under normal circumstances, they wouldn't therefore be deducted from your profits for corporation tax purposes. And so the capital allowances regime allows us to get tax relief for things that don't go through the profit and loss account. Now, the annual investment allowance is a relief under the capital allowances regime, which means that if you buy plant and machinery or equipment, you can deduct the whole cost of the equipment from your profits for corporation tax in the year that you buy that equipment. So for example, you spend £100,000 on a machine, that's added to your balance sheet. The capital allowance regime allows us to take that £100,000 and deduct it from your profits to reduce those for corporation tax purposes by the full £100,000. Now, the limit for which you can claim annual investment allowance is currently set at £1 million per year for each accounting year that you operate under, which is very generous. Most of our clients don't get up to near the £1 million level, and so the annual investment allowance limit isn't overly forthright in their thinking when they're planning their capital expenditure. But the £1 million limit is actually a temporary limit, and the limit is set to reduce back to its previous limit of £250,000 a year with effect from the 1st of January 2022. So the first tip this month is to ensure that if you are going to undertake significant capital expenditure that will exceed £250,000, then in order to get full relief for that in the current accounting year, you'll need to do it before the 31st of December. If you exceed the annual investment allowance, then the remainder of your expenditure under normal circumstances is pooled, and you either receive 18% per year of the amount that you spent as a relief for tax purposes, or 6%, depending on what type of equipment and machinery you spent the money on. The detail of that is probably too broad for us to go into in this video, so I won't go into any more detail than that. And just a reminder that whilst that limit for annual investment allowance is reducing, we have also, of course, got the super allowances first year allowance, which was introduced from 1st of April this year. And the super allowance actually acts as a first year allowance and gives you 130% of the amount that you spent on equipment. And so it's actually more valuable at the moment than the annual investment allowance. Now, of course, for an item to qualify for the super allowance, it must be brand new. So many of you will be spending money on, second-hand machinery or second-hand vans, things like that. They won't qualify for super allowances, and therefore we need to make sure that we're looking at the annual investment allowance and the limits there when we're planning our capital expenditure. Okay, so this month, because we didn't have an Ascentis TV in August, we've got two quick tax tips for you this month. The first one relates to VAT and the reduced rate for VAT in the hospitality industry, which, as part of the package of coronavirus business support measures, VAT that the hospitality industry charged to their customers was reduced to 5%. Now, this 5% rate is going to end at the end of this month on the 30th of September, and the reduced rate will increase to 12.5%. So at the moment, many of you in the hospitality industry might be making promotional offers whereby you encourage customers to book early in advance of perhaps staying at your hotel or your B&B or whatever next year. If they book now and pay a deposit, they can pay 5% VAT rather than the higher rates next year. The main thing to ensure is that from 1st of October that you make sure that you recalibrate your systems and your offers and your promotional material to reflect that reduced rate is now going to be 12.5% rather than 5%. Of course, the other administrative factor is that if you are not offering the reduced rate to your customers but using it to support your business through the tough times, you recalibrate your systems to make sure that your sales reflect the increase from the 1st of October. And just as a note, just for future reference, the VAT rate that applies to the hospitality industry will increase further back to the normal rate of 20% from the 1st of April 2022. The second tip this month relates to the statutory sick pay rebate scheme. Again, something that was brought in as part of the coronavirus support measures. This is set to end on the 30th of September. So for any members of staff who are forced to take time off or isolate because of COVID after 1st of October 2020, you will no longer be able to reclaim the statutory sick pay that you pay them from the government. Now, whilst that part is ending, the extra concession whereby employees don't have to go through the waiting days, the 3 waiting days they would normally have to go through before they become entitled to statutory sick pay, is going to remain in place. And so anybody who is off sick and entitled to statutory sick pay because of COVID-related illnesses from the 1st of October, you'll still have to pay them from the first day that they are off sick, rather than being able to leave them unpaid for the first 3 days.
Great stuff. Well done, Mark. Okay, finally, Lee is going to take us through compliance issues in AdminMin.
Hi everyone. All the usual suspects there on the slide for you. Hopefully not many people actually still filing a paper tax return, but don't fall foul of that 31st of October deadline if you are. In terms of notable mentions, well, it's the end of CJRS. Last period we can actually put people on furlough is the 30th of September 2021, and you'll get that money, or you'll have to put in the claim by the 14th of October. Same goes for a lot of other government incentives around the COVID pandemic. The Self-Employed Income Support Scheme deadline is the 30th of September, and also the same deadline applies for the Enhanced Apprentice Recruitment Incentive. There is a little bit of leeway with the VAT rates, so it was 5% and now it's 12.5%. It will go up to 20% in March. We've got the budget at the end of October, which will probably give us a little bit more insight into the annual investment allowance and maybe the recovery loan scheme, but both of those are due to either end for the loan scheme or reduce for the annual investment allowance at the end of the year.
Thanks, Lee. Okay, guys, you're all up to date. Don't forget the changes in the coronavirus support rules from Lee's AdminMin and from what Mark said earlier during tax tips. Bit of a short episode this time, I know, but we've got everybody back to work full time now, and so we've got some really good interviews lined up with guests in future shows, which we'll bring to you. Until then, take care. See you in the next episode.